is Ryan Miller, and for the past 15 years, I've helped hundreds of people to raise millions of dollars for their funds and for their startups. If you're serious about raising money, launching your business, or taking your life to the next level, this show will give you the answers so that you too can enjoy your pursuit of making billions. Let's get into it.
The risk to all of us in the market lately is vast. One of the most prevalent risks that the top investors are looking at is the global de-dollarization around the world. What's an investor to do? And how can we mitigate this risk? Well, my next guest is a gold mining expert that has over $600 million under his belt, and he's about to teach you and I key price points to look out for in your pursuit of making billions. Here we go. Hey, welcome to another episode of Making Billions. I'm your host, Ryan Miller, and today I have my dear friend, Jonathan Aud. Jonathan is the president and CEO of Dakota Gold, a publicly traded South Dakota-based responsible gold exploration and development company that he started with precious metals mining titan Robert Quartermain. He has over 15 years experience in gold exploration and development, and he's raised over $600 million for all his various investment opportunities in the gold industry during that period. So what does this mean? Well, this means that John is changing the game in gold exploration, and he's about to teach you the things that he looks for when investing in this sector. So John, welcome to the show, man.
It's a pleasure to be here. I'm a huge fan, and go Oilers.
Yeah, that's right. We're hoping for the cup. I love it, man. Another fellow Canadian. It's really great to have you here. I know mining and energy and all these things are really big in a resource-rich country than one that we live in, but we're speaking to people in 100 countries around the world, and we've grown to the top 2% all because of great guests just like you. Maybe 30-second introduction. Who are you, and what is Dakota Gold?
Yeah, so Jonathan Aud, President, CEO, co-founder of Dakota Gold, which is revitalizing the Homestake District in Leeds, South Dakota. And many people don't know this, but the Homestake mine in Leeds, South Dakota was, and still is, America's largest single gold mine in its history. So over 40 million ounces of gold was mined here from 1876 to 2001. And we are revitalizing the district. We've made several discoveries. We came out with our first gold resource on April 30th on one of our projects. Everything we're doing is on private land, and we can maybe talk about that later in the show. And I've spent over 2 decades financing small cap metals and mining. My last company was a company I was president, CEO, and co-founder of called Gold Standard Ventures. And we consolidated a land package in the Carlin Trend, which is a very prolific gold trend in Nevada, made several discoveries, and it was bought by a bigger company called Orla Mining for about $300 million. My business partner and I, Bob Quartermain, started this company and merged with a public company that had a small land package in the Homestake District. And we've raised about $120 million US to acquire this land, to put the opportunity together, and to explore and make these discoveries.
I love it. So, mining for gold or mining for anything can be a challenge at times. There's so many things that are going on. But for people who are just starting out in this industry, maybe you can help them understand what are some things that they can do. Number one, to get some early points on the board. And number two, what are some things they should not do or look out for to avoid blowing it all up in the beginning? What would you say?
I think one thing that has served me well over the last 2 decades is investing in people. And I've said that repeatedly, so people is really important to me. People who have experience, who are aligned. So people who are not aligned means they have none of their own money invested into their company. So I don't know how you can tell someone else to invest and it's so good, but yet it's not good enough for you to put your own money in. So that's something for me. That's one of those things I look for. Jurisdiction, there's just certain countries that I have no interest in being an investor in or principal of, where rule of law does not apply. Typically going to parts of the world that maybe have been seen as mature or have been overlooked. These are places that I like to go. And when I'm investing in the US, I try to do as much as I can on private ground. So you're not dealing with the federal government, because it triggers a different permitting process. Permitting and mining around the world is becoming a problem. And it's taking longer to get a permit, from discovery of whatever metal you're looking for to production, is now over 12 years. And you talked about, mining and, this whole decarbonization and electrification of the world. Everyone wants that, but, a lot of people don't want mining. And the only way we get to this electrification and essentially redo the grid and decarbonize is through safe and responsible mining. And I think the world is waking up and saying, wow, we underestimated how many hundreds of billions of dollars it will take, or trillions, in infrastructure, updating the grid to get to that, carbon zero, net zero.
Okay. And you mentioned people. What kind of things? So I'm assuming you're talking about like when you make an investment with an operator of a mine, that's what you're talking about as far as people. You're talking about operators. I'm assuming, you keep me honest. If that's the case, what kind of things do you look for when you look for good operators? I know you mentioned skin in the game. Is there anything else you can unpack that?
Yeah, I think, all commodities have cycles. And I think anyone can make money in a bull market when metal prices are going up or when, the Dow or the S&P is going up. But it's what you do in bad times that I think defines and separates good management from great management. And I think when you look at my business partner, for example, he co-founded two companies, Silver Standard in 1987. It had a market cap of 2.5 million. And when he left the company in 2010, it was at 2.5 billion. He started a new company called Pretium, went public with a $250 million valuation, and it was sold for $3.5 billion to the world's third largest gold producer. And he did for the second company called Pretium from discovery to gold pour in under 7 years. So those kinds of operators who are able to think in more than just one dimension. So he can think like a mining engineer, like a geologist, like a financier, strategist, people who have that ability and who've done it time and time again through up cycles and down cycles and everything in between.
Brilliant. I think we all agree that, yeah, sure. When the market's doing good, I mean, if you're not making money, something's really bad, but most people can. But when that timing or the market shifts, that's where I would say it really starts to separate the wheat from the chaff, so to speak. And so what do you look for? What advice can you give as far as what signals to look for, or at least information to look for those changes in market cycles?
Yeah, so I think when you look at what's happening right now in the U.S. with the U.S. Federal Reserve, at least this rates higher rates for longer narrative certainly playing out. And are they going to raise one more time before they start cutting? If you recall Q4 of last year, they were pricing in 7 rate cuts for this year. Now it's 1, and it might be 0. It could be one more rate hike. And I think gold has historically had an inverse relationship with the U.S. dollar. So the U.S. dollar has been strong, but I think, as I was saying earlier, the gold represents less than 1.5% of global assets. And there are very, very significant trends that are happening right now that no one is paying attention to. And that is, for example, over the last 2 weeks, this 50-year relationship that the U.S. has had with Saudi Arabia for the petrodollar. That's not happening anymore. And you're seeing this massive de-dollarization. Now, the U.S. dollar will still be the world's reserve currency for years to come. But every year, I think you'll see a gradual erosion away from that. And I think the fact that we're having this discussion and gold is $23.50 when the Fed does cut, whether it's Q4 or Q1 or Q2 of next year, I think that's where gold could go significantly higher. And then you will likely see money flow into the gold ETFs and trickle down into the gold equities. And I think that's a really, really interesting time. And gold stocks, from a historical basis, have never been cheaper. That to me is really interesting. And that's the real value proposition for people who are looking at entering the space.
So speaking of gold's never been cheaper, I really like that. Maybe we can unpack that because this can be a problem for people. We mentioned the second part of my question is, what are some of the things you can do to not lose? And I would say sometimes, whether it's gold investing or other investing, sometimes there's things that we call maybe a value trap or catching a falling knife. And so sometimes when you see on the outside, you're like, oh, it's such a good deal. The price is low. Maybe I should buy. How do you treat that as far as declining prices? Is it a value? Maybe. Is it not? Maybe. What advice can you speak to a beginner who's looking at this historically low price? What would you say?
Look, I would say that fear is always a more powerful motivator than greed. And so people have a much easier time chasing stocks than they do, averaging down or buying stocks. And sometimes there are liquidity events that happen. A fund has a redemption, it has to sell and puts pressure on a stock, or, the Fed comes out with a surprise announcement and the gold price gets slammed down, but I look at those things and I say, okay, have the fundamentals of the company changed? No. Okay. And I have an opportunity to buy a stock at a 20 or 30% discount. I love that. That's fantastic. And during that period of time, are they buying or selling? When insiders are selling consistently, that's obviously something to look for. But if insiders are buying and putting their own capital to work, I think that speaks volumes to where the stock will ultimately go.
I love that. To tack on to this, maybe you can walk through something. There's a little number I know it's called Asic. And maybe walk people through what is Asic and how does that help with pricing and understanding whether you should get into a deal or not.
Yeah, so ASIC stands for all-in sustaining cash costs or all-in sustaining costs. And when you're looking at a gold producer, the lower the number, the better. So arguably, or in my opinion, the best run and the best managed gold producing company in the world is Agnico Eagle. Trades both in Canada and in the US, and they are now the world's third largest gold producer and second largest gold producer by market cap. Most of their assets are in Canada. They have assets in Australia, Mexico, Finland. Their all-in sustaining costs are around $1,100 per ounce. So they've got a over 50% margin, and they're just really, really good operators, and they think long-term. And when they commit to being in a mining camp or a jurisdiction, they have multiple operations feeding one central facility. So they can realize economies of scale. They know the workforce. They know the government. They know the social issues that exist. And then you've got higher cost assets that require a higher gold price environment to make any money. Those are typically in that $1,600, $1,700, $1,800 an ounce. You're still making money, but not the kinds of margins that an Agnico Eagle would make. And then if you want to look even further, a model that a lot of people like is the royalty model. So let's take Franco-Nevada, for example, which is FNV in New York or in Toronto. And they take a certain percentage off net mining sales, metal sales from a company's mine. So they don't actually have any operational risk. They have no commodity risk. They have no people risk. They just get a flat fee. So if a company has $100 million in revenue for a mine and they have a 2.5% royalty on that, they get $2.5 million regardless of what the gold price is. They get that off the top.
Awesome. And so would you say that like 1,1700 ASIC number is about a standard benchmark? And like how do you gauge above the line, below the line? What's the line?
I would say you want to be in that bottom quartile, which would be in that anywhere from 1,000 to like 1,300, 1,400. So you have a lot of margin because the gold price historically can be volatile. Let's not forget here in 2001, 2002, the gold price was below $300 an ounce. Part of, the challenge is people look at this gold price environment, think these gold producers should be, making billions of dollars, and some of them are. But the challenge is the cost to explore and develop and permit and mine and reclaim, and the social issues and the government. Those costs have risen as fast or faster than the gold price itself. And COVID created a lot of supply chain issues, labor issues, inflationary pressures. So it's, these deposits are getting harder to find. A lot of the time, they're remote parts of the world that require massive investments into infrastructure. But once you get that first mine built and you have this sort of, hub and spoke where then you build your second one, your costs are lower because you already have the infrastructure. Then you build your third one, your costs are lower because you already have two, and then you can get economies of scale. Some of these companies that have the ability to look out 10 years, 20 years, 30 years, and how they sequence bringing on new mines, that's great. And then as you come down the food chain, there are, call it the small to mid cap gold producers. Then there's the developers, guys who are building mines. And then there's the exploration companies that are looking to either make a discovery or move something from discovery to a resource to development to production.
Got it. You wouldn't have a show called Making Billions without talking about the market. So I'm just curious, what are you seeing out there in the market now? What's going on as far as gold and everything, all the headwinds, tailwinds? What are you seeing?
I think this is an incredible time to be looking at this space. And, you've got 150 central banks around the world that are accumulating physical gold. So I think very interesting. So when Russia invaded Ukraine, the U.S. put all kinds of sanctions, seized a bunch of assets. So what the U.S. did is they gave the rest of the world a playbook that if you do something that's against U.S. foreign policy, and again, I'm not going to say what Russia did was right. So a lot of countries are saying we have our gold stored in your country. We want to take that back to our own country. So you can't expropriate that. So and China's doing that, and this, formation of the BRICS. And I don't think there's going to be a currency because there's too many cultural and social issues, but there's this desire to have an ability to settle transactions in something else other than US dollars. And I think gold is going to play a pivotal role. So I think you have gold price at $2,350, and there still isn't a lot of interest in the gold equities. And I think that is this huge opportunity. Again, if you've got a view that in the next 5 years, the US dollar is lower than where it is today, and that these deficits are becoming a problem, they will be a problem at some point. You look at 2.5, 3 trillion a year in deficits, $1 trillion on military, and $1 trillion service your debt. At some point, that is unsustainable. And so I love the position that the resource industry is in. And I think that when you take the copper market, for example. So copper is, the essential metal to electrify and decarbonize the world. Without copper, none of this works. Solar doesn't work. Wind doesn't work. EVs don't work. The largest copper mine in the world is called Escondida. It's in Chile, and the world needs a new Escondida every year to meet demand. If you were to be so fortunate enough to find an Escondida from a discovery to production, 12 to 14 years. If you have a brownfields project, so a big copper resource, and you're looking to get it permitted and financed to production, 7 to 10 years. So there's no pipeline. So I think you will see materially higher metal prices in a lot of these different commodities over the next 5 to 10 years.
All right. So we gotta get you into the asteroid mining here pretty soon. You hear about all these commodities that's floating around in space. But in the meantime, so I was just gonna ask what's your opinion on where the smart money is going? So it sounds like precious metals, that comes at no surprise, or just metals in general. And one of the things that you taught me when we spoke offline is there's about $6 trillion of cash or dry powder sitting on the sidelines. And what do you believe is the catalyst that's going to unlock that $6 trillion?
Yeah, so I think when the Fed clearly pivots from raising rates to easing, I think you will see that money looking for more attractive returns. And depending on what kind of cutting cycle we go into, I think one of the executives that I follow, he's not a mining guy, but Jamie Dimon, CEO of JP Morgan, a year ago he was talking about, look, I think rates are going to be higher for a lot longer. People should prepare for that. They should have strategies in place to prepare for that. So, but you're now coming to a situation where it's getting to a point where it's, this can keep getting kicked down the road, but you keep raising the debt ceiling, and you've got your debt's $35 trillion. It's not sustainable. So I think that money is going to want to go and chase the hot sector. So, AI, is a big one, but I think you'll see another leg up in the whole EV, battery metals, again, anything to do with the electrification, green energy, decarbonization, that's going to catch a bid all day long.
Perfect. So as we round third base, I'm just curious, let's give some people the competitive edge, some of the secret sauce, maybe 2 or 3 pieces of competitive advantage that you can provide to people. If they're saying, I love what you do, I love everything you're talking about, how do I become you in a quarter of the time? What would you tell them?
Well, there's a famous investor, resource investor in the mining industry, and his name is Rick Rule. And he's had I think a 5-decade career. And he will talk about, if I just invested in 6 people, and he calls those people the 6 mining legends, living legends, I would be infinitely wealthier than I am today. And he's already a very wealthy man. So again, I keep coming back to, people who have a track record, who have alignment with their shareholders, who put the shareholder first, who can articulate their strategy and what they're trying to do. I think if you invest in good people, you will save a lot of capital and a lot of headaches. And I think so that for me is a big one. We talked about jurisdiction, location. There's certain, countries that I have no interest in being an investor in or a principal of, because it's just too hard to take on social risk or permitting risk, or when the government can say, you know what, we want a bigger piece of the asset, or we want the asset. And I've had friends who have been in those situations, and it's horrible. You can lose 5-10 years of your life and all of your money.
Okay. And so finding good operators, working with them. And we talked about some of the things that you look for early on in the show. We talked about things you look for, is finding operators. What else would you say could really accelerate people in as far as being an expert investor in this space? Again,
during periods of extreme pessimism, where you essentially have that for a lot of the mining equities, and where there's just not money flowing in. And I think that's why now is an excellent time to be looking. And you've got this massive disconnect, this bifurcation, where you've got strong metal prices and somewhat weaker equities. When you look at on a relative value basis where gold is, looking at where it has been historically. So I think just again understanding kind of cycles and fund flows, and again just looking at, so when the Fed starts to pivot, the market will typically front run that. So at some point in the next year, you likely will have a Fed pivot to an easing cycle. Another interesting thing that I find, just fascinating, is that the world's 2 biggest economies are doing opposite things with interest rates. One's cutting and one's hiking. So I find that super interesting. So I think the longer rates stay higher in the US, ultimately the higher gold is going to go. That's my strong conviction and strong belief. Now there might be a lag of money coming into the ETFs, and that's really where you will see some of these equities materially higher than where they are today.
Yeah. Okay. Love it. So as we wrap things up, is there anything else you'd like our fans to know? How to reach out to you or anything at all?
Yeah. So we've got a great website that's a phenomenal resource for what we're doing and who we are. And it's dakotagoldcorp.com. We have a LinkedIn page where we post a lot of things. We're very active in our community in Leeds, in South Dakota. Those 2 pages are great. Look, my email address is jawde@dakotagoldcorp.com. So JAWDE@dakotagoldcorp.com. We are the kind of company that I don't care if you own 100 shares or 1 million shares, you're an investor. You've taken the time and you've taken your own capital and you have many places to put that capital and you've chosen to put it with us, I'll give you all the time you want. Because without investors, this concept that started from a flight down to South Dakota and looking at, wow, this is the most significant gold mine in the history of America. And we have an opportunity to do these deals with Barrick Gold out of their closure group. Because when Barrick came in and bought Homestake, it wasn't for South Dakota. It was for other assets they had in their global portfolio. And we bought it out of Barrick's closure group, and then grew the opportunity from 5,000 acres to 50,000 acres. So we are aligned with shareholders. I mean, my business partner and the co-chair, Bob Quartermain, doesn't take any salary. He works for free, and he's the biggest shareholder. So he's super aligned with all of our investors. Our other co-chair, Steve O'Rourke, he ran global exploration for petroleum for BHP. So this is a guy that had multi-billion-dollar budgets every year. So we've got people who have taken assets from discovery to development to production, and who have a lot of skin in the game. Between Bob Quartermain and I, we have almost $10 million of our own money into the deal.
Brilliant. So just to summarize everything that we talked about, so find excellent operators to invest alongside of them. That is one of the keys that Jonathan's talking about. The other thing that you mentioned, Jonathan, is look for metals, the value of those metals and how it compares to the value of equity, and use that as a position, kind of a launch pad, if you will. And then finally, one of the last things that we mentioned was seek operations with an Asic around 1,000 an ounce or better. You do these things and you too will be well on your way in your pursuit of making billions.
Wow, what a show. I hope you enjoyed this episode as much as I did. Now, if you haven't done so already, be sure to leave a comment and review on new ideas and guests you want me to bring on for future episodes. Plus, why don't you head over to YouTube and see extra takes while you get to know our guests even better. And make sure to come back for our next episode where we dive even deeper into the people, the process, and the perspectives of both investors and founders. Until then, my friends, stay hungry, focus on your goals, and keep grinding towards your dream of making billions.